how should small businesses be thinking about their relationship with a bank these days as we're talking about this bigger picture of all these different things that are coming and happening with banks, and with the economy? Um, how should they think about a healthy relationship with a bank, and what can a bank do for them?
Yeah, that's a really good question. And you got to think of where you want to go from there.
Mm-hmm.
There's a lot of options. You can open up accounts very clearly. Does it make a difference if they're in your neighborhood or online? What is important to
Mm-hmm.
you? To me, ultimately,
Mm-hmm.
what is important is, you know, banks generally sell the same product. I'm not kidding anyone. They're all
Mm-hmm.
the same bank accounts. They all go through the same system at the end of the
In terms of
day.
function, yes. In terms of
Correct.
function,
That
yes, yeah.
is. So, banks themselves, they may have a different differentiator on their marketing on the front end, but, we're all selling pretty much the same thing. But I can tell you in 2009, when the shit hit the fan and that business was broke on, the federal government, when they came and examined us, they wanted us to foreclose on everybody that was defaulting. So they made it very difficult. If we had a loan at 7%, they could afford that, but they could afford 5%. Gave it was more incentives for us to foreclose than it was to work it out. Because when you worked out that loan, it went on our books as a troubled debt, and more troubled debts increased our insurance and increased our costs. So, but in spirit, that's not a good thing. Even though if that property did have enough equity where we were going to remain whole from foreclosure, we weren't going to foreclose on that person if they could afford that. It's
Right.
just plain insensitive. But when you do go with a large bank and they paint with a broad stroke, that's what you're going to get. Wells Fargo eliminating lines of credits and businesses, over the past year. So I heard people that, in their practice. So, you need to know who you're dealing with up front. So we don't do that. We're not going to paint a wide brush and say, you know what, I'm going to eliminate all of my lines of credits, because we individually looked at those lines of credits and we based those lines of credits not on whether they deserved it, but whether they had a need to utilize it. We're just not selling products to add to our quota.
Right.
My staff, we're not doing that. They're not going to hit a quota for selling 6 accounts to one individual.
Right.
We don't do that. We're never going to do that. And so when there is an issue, whether we made a mistake or whether some inadvertently happened to come, you're going to be able to talk to somebody very quickly. Hands down. So
Right.
maybe, on the front end, is it going to cost more? Is it going to more time? Maybe, because, we have to make a certain percentage so we can maintain that level of service, because we're going to be there for you with good times.
Right. It's just
and
like
the bad
anything else in
times.
the market.
We're not going to run away from you during the bad times.
Right. Exactly. It's just like any other product in the market. If there's a premium on it, and again, it's a slight premium, to the quality, right? I mean, if the quality's not there, was it really worth that extra half a point you got off on that loan? I mean, I've dealt with big banks, from a customer service standpoint, just as a consumer in the past, and it's like dealing with the government. That's the best analogy I can give, because if it doesn't fit in their box, it's just you're completely shut down. There's absolutely, the branch manager, the regional manager, the whoever, they'll straight up tell you, I cannot do anything about it, and I won't. My boss cannot do anything about it, and they won't, and so on and so forth. This is a policy for this reason, and we just will not do anything. And to me, I find that just like that's just crazy how they're able to
If that
operate a business
half a
like that.
point difference on that loan is going to make the difference in your business, you shouldn't be in business, And if that's the biggest thing
Right.
for you, is that rate having, now obviously if there's a huge rate spread, that's a different story. But if that half a point is going to make a difference in your loan on that rate, for you to go to one of the top 4 largest banks or community bank, you don't believe in relationships, because at the end of the day, in 2 years, 3 years, if you wanted to modify that loan, they're not going to do that, and modifications, let's say you have 3 pieces of collateral and you're going to sell a piece of collateral and substitute it for another. That big bank is not going to know how to do that. They're going to say, pay us off and we'll redo it. And then you've got a whole nother level of costs. So where we're going to look at that, we can modify that, charge appropriately just for that. And then that saved you so much time. It saved you doc stamps and tangible taxes. And it's just.
Yeah.
And I tell you, people that have had many commercial closings and have dealt with my staff, and they have dealt with a large institution, they'll tell you, oh my goodness, you guys are smooth. You're on top of it. You looked out for our interests. We reviewed that appraisal actually and looked at it and said, this doesn't make sense, and had that conversation with our customer. And, we actually look at the surveys. We go through those steps and follow the closing and are there. We have an employee at that closing. You're not going to get that at another bank. And so if that half a point is important to you, we're just not the right fit.